And so when we look at the fund business, it has changed. It has changed significantly. Within the organization, I mentioned the team and the depth and the control processes. Now they're looking for SAS 70 requirements at the bigger institutions. For those of you who don't know what SAS 70 is, basically an internal audit of your control processes. There's type 1 and type 2. Type 1 says, okay, we looked, you've got these processes. Type 2 said we actually tested the processes and they work, and it's done annually. Now, the bigger funds have these. The smaller emerging managers, obviously for cost reasons, that's not necessarily something you want to do, but you need to have these processes documented within the fund. That's a critical thing. Fund docs, liquidity mismatches, gates, notice periods, all those are relevant. The difference, if there are differences between, for example, your PPM and your subscription documents, those differences have to be reconciled because it would suggest to the investor that there is some gap there that's not closed, right? So people don't understand the subscription doc, by the way, supersedes the PPM. And so whatever you have in your subscription doc should match up to the PPM. If it does not, that's a red flag. Liquidity issues. If you say you have 90-day liquidity and your asset class does not particularly match up with that, that's also a huge red flag. Some of the obvious things, side letters, side pocket agreements, those sort of things. Okay? So these are just some of the items we're seeing out there on the horizon. On the third party side, when you look at the fund administrator, these days now they're being audited. The institutions, the bigger ones, are looking for SAS 70 requirements from the administrator. What are their operational processes like? Why? Because that's a component of the overall operational risk. And so those things are critical. Same thing with your prime broker. Goldman just got sued and had to pay up $20 million. So now there's inherent risk in the prime brokerage arena. So they might now start to look at the funds that they're clear through to see if they have these types of processes in place. And so the dynamic of the arena has changed quite a bit. And so what we tell fund managers is that, listen, you need to at least project an institutionalized looking organization. A single manager fund these days is at significant risk because you've got concentrated decision making, you do not have a bench. That creates a problem because there is innately significant bias in the way you make your decisions, which can lead to significant risk. On the investment side, everybody claims to have a proprietary strategy. Great. Can you explain to me in plain English how you generate the alpha that your proprietary strategy is supposed to generate? And if you can't, well, then my capital is also proprietary, right? You say you have a great strategy, you claim you're generating all this alpha. Well, tell me in plain English, how do you go about doing this? And what are the risks associated with that? Everybody has great risk management systems. And there are a number of funds that I know that claim we use trailing stops, we've got all this great, and then they blow up. So if you've got such great risk management systems, why do you have these, when you have shocks in markets, these events that occur to your fund? So you've got to be able to articulate your alpha very clearly in the current environment. And you've got to explain to people, gee, well, if 2008 happens again, how will my strategy mitigate downside risk? What would I do different? Suppose you use a lot of leverage. Suppose you can't leverage up. How does your position sizing relate to your risk management over time? And do you have data, by the way, that I can go back and look through to see how this particular risk management strategy is actually implemented? So it's a much more granular approach to due diligence and risk management. As I mentioned in that Opalescar article, we call it due diligence DNA because it's actually getting to a level of due diligence that's beyond what is usual in terms of looking at how you structure your funds these days. It's a requirement not just by the family offices and by the pension funds and endowment funds, but also high net worth investors, because many now are turning to advisors as sort of the gatekeepers initially to go out and do the vetting on these funds in the marketplace. And once we get all that wrapped up, the next step is the manager and the character of the manager. Now, we know check for credit score and criminal record and all these sort of things, but also, what are you doing between 10 and 6 a.m.? You can meet me at your office at 8 a.m. in your brand new suit. We can sit down, nice shiny conference room, but really, how do I know that your activities are consistent with what you claim your character makeup is between 10 p.m. and 6 a.m. in the morning? And so now there's that level of intelligence that's being conducted on managers out there to ensure that what they're doing or what they're saying is actually what they're doing. And at the end of the day, folks, the decision to invest in your fund is going to be made when I sit across the table from you and I look you in the eye and I get that intangible, that feel, that thing that says, you know what? I'm going to trust you with my money because I believe what you're saying to me. After I've gone through all of the due diligence requirements, after I've done the on-site visits, after I've checked with the fund administrator, I've checked with your auditor, I've done all these things, I'm going to make a decision looking you in the eye saying, you know what? I trust you. Because post-2008, that is going to be the bottom line. Performance is a tertiary thing these days. We've heard a lot about the processes in your organization, the people in your organization, and then the performance. That's the last thing. The first two can create significant operational risk and investment risk. And that's where the focus is today as we look at how do managers position themselves to raise capital. Because all these things have to be in place, you have to be ready to receive the capital. It's more than just standing up in front of some potential investors and making a pitch, because they're going to come back and say, okay, well, we like what you're saying, we like the strategy, now let's look through your organization and see what you have going on. And that look through, when they come in, you need to have all these things in place to ensure that you've got a shot. And because it is, like all environments, extremely competitive. Any questions? Yes?
Can you speak more on execution risk?
Execution risk has to do with...
Oh, yes. I said, would you speak more on...
Oh, you want me to report? Execution risk was the issue. How you get into a trade, your ability to get into a trade, and also how you exit the trade, and your position sizing within that trade. And the ability to have your prime broker actually get the trade done. And what happens if there's a market shock and your primary prime broker cannot execute? Well, do you have a secondary prime broker as a backup? Right. That's the type of execution risk we're talking about. Somebody else had a question.
So if you're using separately managed accounts with a major third-party firm and you don't have custody, sidestep, all that, some of that?
Some of that is sidestep. The issue then, with the SMA structure, you mitigate a lot of that. The issue then becomes your pari passu execution within the accounts, how that takes place, the ability to look through minute by minute to see how your trade execution takes place, your risk management within the account, and then your operational processes in the firm itself. Right? And if your prime broker is SAS 70 certified, for example, or your auditor's got a PCOB audit firm, meaning that it's a peer-reviewed audit firm. Those things are becoming very, very much so more important these days. Right? In other words, your buddy Jim that you went to college with, who's a CPA, who's got an office down the street on Brickell, that guy as an auditor really doesn't cut it these days.